Greetings and welcome. Thank you for joining us today. We're broadcasting live from Salt Lake City, Utah, where I am. Paola's in Austin, Texas. And Andrew, where are you?
I'm in Portland, Oregon.
Portland, Oregon. So thank you everybody for joining us today. Little housekeeping for Zoom, which you're all familiar with. We can't see or hear you, but you're most welcome to, and we encourage you to ask questions in the chat box and Q&A. And for the record, this is being recorded and will be posted in a few days in the Family Office Insights YouTube channel. So as usual, if there's something you'd like to review after the presentation today, or you'd like to share it with others who may benefit from what you learned today, you're so most welcome to do that. And also for the record, we're going to make sure that you are put in touch directly with Paola and Andrew, so you can follow up with them directly. And also, as usual, we don't have any skin in the game here. Family Office Insights doesn't make any money if you invest in the fund or participate in any way with the presenter. So we totally stay out of the way, and you're welcome to communicate directly with them. And again, if there's anybody in your community or after you hear the presentation today that you think would benefit from knowing more, you're most welcome to connect with them directly and share that with your colleagues and friends. So again, we encourage questions. We'll get to as many as we can. We have an exceptionally large group joining in today, but we'll do our very best. So with that, thank you for joining us again. Paola, take it away. Thank you for being here.
Hi, Arthur. Thank you so much. Thank you so much for facilitating this webinar. It's so nice to see you. And thank you all for joining today. It's only Monday, and I know it's a busy time, especially with the holidays coming up soon. So I guess I will start by introducing myself for the people that don't know who I am. My name is Paola Origel. I am the co-founder and head of investor relations of ChainLink Capital Management, a fund of funds that invest in cryptocurrencies and blockchain technology. And by the way, this is very important. We are not related or affiliated with the Chainlink protocol in any way. I just want to make sure that people understand that and knows that before we start this chat. So a little bit more about me and my background. I was born and raised in Mexico City. And right after college, I worked for the second largest concrete and cement company in the world. And I created an e-learning platform for them, which was later integrated in something called Universidad Cemex, and is still up and running around the world today. Because of that, in 2003, I moved to the United States to create and implement similar platforms for retail companies like Target. And a few years later, I decided to switch from technology to traditional finance, where I spent over 11 years working in different capacities at multifamily offices, hedge funds, and at HSBC. And later on in 2018, I went back to technology and I worked as head of business development for a software development company called Shakti. And this job was fantastic for me because I always been super passionate about technology, but one of the co-founders, he's actually the inventor of 3 major APL languages, including A+, K, and Q. And he was actually exploring the possibility of implementing his newest language called Shakti into the blockchain. So it really gave me the opportunity to learn, a lot about the programming languages that some of the protocols, that we're going to talk about today are using. And finally, this year in January 2021, I joined full-time ChainLink Capital, as I said before, as head of investor relations. So that is my background, a little bit about my experience. And so I think it's important that I share with you how did I get into the blockchain space. And I guess my story is one of those painful Bitcoin stories. 2010, I was in New York City and I was having a coffee with a friend of mine who at the time was working with MIT at a project, and he told me about Bitcoin. And I could understand what it was, but he said, I should just buy it. And I tried to buy it, but the reality is that it was not accessible as it is accessible today. So I couldn't buy it, but it piqued my interest and my curiosity. And I started reading a lot about actual blockchain technology and crypto. And crypto, not meaning actually cryptocurrencies, but the cryptography. And I found out that blockchain is a new concept. Like it actually comes from 1991. So a few years later, I think it was around 2012, the same friend told me that he was going to start working with something called the Ethereum Foundation. And at that point, I already understood a little bit better about blockchain technology and cryptography. And I got super, super excited because I understood and I thought, oh man, it's like this technology is going to be able to disrupt a lot of the, processes, they are not efficient in technology and in finance. And I got super, super excited. So at the same time, in New York City as well, I met who is my business partner, one of my business partners at ChainLink Capital, and he is with us today. Hi, Andrew. And we became friends right away. I was very impressed, by how intelligent he is and how much he knew about technology. And I felt that we share, there was an alignment, in our values. And in 2017, he invited me to be part of ChainLink Capital Management. And I thought it was the best opportunity for me to participate more in the space, not only as an investor, but to actually, interact with some of these protocols and to understand how they work. So of course I say yes, and the rest is history. And that's why I'm here today. But I'm going to stop there so Andrew gets a chance, to introduce himself. Thank you.
Thanks, Paola. I'll be brief. I'm Andrew. How Paola said, I got my first experience with decentralization in 2007. I was working at NASA. I'm originally a space scientist, and there was a government shutdown, and we were prohibited from traveling. So we couldn't travel to the 10 different NASA centers where 100,000 plus of our colleagues were. And as a result, we said, okay, we got to figure out how to collaborate virtually. And so let's do it in something called the metaverse, which not a ton of people had heard about at the time. It's very much in the news today, but I brought NASA into the metaverse in a platform called Second Life so that we could collaborate across distance in a virtual world. And I was really inspired by that. I found that even when we could travel again, there were some benefits to our ability to collaborate in the metaverse as government employees and with our external stakeholders and constituents. And I've been inspired about decentralization ever since. Most of my life, though, has been much more boring than that. I've been a government technologist, building big centralized transaction management systems as a government chief information officer, and then as a GovTech entrepreneur, and really spending a lot of money and a lot of time trying to build the systems that do things like issue parking permits in New York City, boring but important things like that, but in a very traditional centralized way. And my part of the ChainLink origin story, ChainLink Capital origin story, is that I had exited a GovTech company I started in 2017. I had started, as Paola had, to get talked to by my much smarter than me friends about blockchain technologies and why they were going to be a big deal. And I believed it in part because of my experience with how inefficient and expensive it was for me to build these big centralized transaction management systems. And so I developed a fundamental conviction that these technologies were going to matter as I dug into them. I also had money from my exit to invest, and just completely serendipitously, I was invited into a fellowship program called the Edmond Hillary Fellowship in New Zealand, of all places. And my fellows there were literally the leading lights of crypto and blockchain technologies, actually building these fundamental building blocks, like the co-founder of Coinbase, the creator of the Augur protocol, one of the first prediction market protocols in the space, the creator of the United Nations first blockchain innovation fund, and some of the world's leading Bitcoin analysts like Willy Woo. So I got to know these folks personally. I believe the technologies were going to matter as a technologist, and I had money to invest. And so I decided I wanted to invest in these people that I was meeting and in what they were investing in. So I reached out to colleagues of mine that actually had been involved in the hedge fund industry before and said, hey, Paola and a few other friends of ours, let's put together a vehicle that allows us all to pool our money and those of our networks into investing in these amazing people and the technologies they're building. So that's how ChainLink Capital came to be.
Great. So I'll jump in here for a second. Thank you for that, guys. Why don't we go ahead and talk about ChainLink? You want to jump into the presentation? Andrew?
Sure thing. I'll pull that up and Paola, and invite you to take it away in terms of the backstory on the technologies and why we're investing where we are.
Just
Yep.
Full screen if you can. So
Paola, go ahead.
Paola, go ahead. Just repeat what you said about, because there's a person that may have missed the comment about the ChainLink protocol. Is ChainLink Capital related to the chain called ChainLink?
No, so at the beginning of this webinar, I said that we're not related or affiliated in any way to the ChainLink protocol or ChainLink Labs. Yes,
Right.
we're not.
Just
We're fund of funds.
So, Andrew, it's like half screen. Can you put full screen on that?
Apologies for that. I'll try one more time. It was full screen on my side here, so let's see what's going on.
It's not entirely bad, but if you can do it the way
I will.
There, you got it. Perfect.
Perfect.
Great.
Okay. Paola?
I think that Andrew was going to give just a brief introduction of what ChainLink Capital Management does, and then after I can actually just give a description, and just define like what blockchain is and the different opportunities, that the space offers.
Great.
So Andrew, why don't you talk about us?
Sure thing. So we are a capital management firm. As Paola said, we run 2 hedge funds of funds. And I will later in this webinar get into why we think a fund of funds is a good way to invest in the space. But suffice it to say, these are traditional investment vehicles that are available to all accredited investors and qualified clients, whether as individuals or institutional investors. And they provide, in the aggregate, a barbell strategy, basically a way to be exposed to the market in a very diversified way, but that is essentially a bet on these technologies mattering and this market over time going up, coupled with a market neutral vehicle, which is the other end of the barbell in terms of risk and volatility, that enables you to extract yield from some of the inefficiencies that are available in the market and to turn those to your advantage. So that's what ChainLink Capital Management is. We're the manager of 2 traditional hedge funds of funds. Paola?
Thank you about that. And I think that actually is helpful also, to answer the original questions about if we are related in any way, with the chain protocol. So as you can see, we're quite different. So I would like to start, with the basics, about blockchain and really describe. I know a lot of people maybe on this call, they already know and they already understand what blockchain is and the difference between blockchain and cryptocurrencies. But I think it's also a good idea, always to start that way. So, okay, so what do I talk about when I talk about blockchain cryptocurrencies? So I will start defining what a blockchain is. So a blockchain is an immutable, decentralized public ledger. And what I mean by that, I want you to imagine like a digital Excel spreadsheet that records transactions for a specific blockchain automatically. And immutability is very important in this process. And I'm going to use this example, to make it easier for everyone to understand. So let's imagine for a second that Arthur and we have a piece of paper. And on this piece of paper, I write that Arthur is going to invest $1 million with ChainLink Capital Management. And when I write this, on Arthur's paper, the same transaction or the same information appears. So Arthur looks at the piece of paper and he's like, oh yeah, I'm going to give Paola $1 million. Okay, so he accepts the transaction, and then we both, have the same piece of paper with the same information. But later on, for no reason, I decide that, no, Arthur should invest $10 million with me. $1 million is not enough. So I go back to my piece of paper and I delete, the $1 million, and instead of $1 million, I add some zeros, and now it's $10 million. So guess what? I can actually change that on my piece of paper, but on his piece of paper, it's not going to change because that's not what we agree upon. So I know it's a very simple way, to explain how it works, but it's actually very important. And nowadays, there are hundreds of different blockchains around the world, if not thousands. And each blockchain uses a different way to verify transactions. But during this call, I want to focus on the most popular one, which is the one that uses Bitcoin and Ethereum for now. That is called proof of work. So proof of work, the way it actually the way they use it to verify transactions is that you create a transaction, and this transaction gets sent out to a distributed global network of computers so they can verify it. And this process is what we call mining. And mining, what it really means is that these computers, they need to resolve cryptographic equations in order to be able to verify each transaction. And this is a very exciting part for me. And maybe this is like too, geeky, but I actually love this part of the blockchain, is that once these transactions get sent out to this distributed network of computers, all these computers, they want to resolve these cryptographic algorithms, because the computer that is able to resolve this algorithm is the one that is going to receive the payment. So that's how miners actually get compensated. So, but let's go back, with a step back, to the actual cryptographic equations. So once this cryptographic equation gets resolved, it creates a number. It creates a nonce. A nonce, what it means is a number used once. And this number is key in the blockchain process, because this number is an actual cryptographic signature that it gets assigned to a specific transaction, to that transaction. And this number is the piece of information that is going to be put on that digital ledger that I was talking about before. Now, to actually be able to close a block of a blockchain, you need 500 transactions. And the miners get paid, when they complete 500 transactions. So that's why, it actually generates more, or encourages more participation or collaboration, because everybody wants to resolve these equations to actually get compensated. And as I said before, different blockchains uses different ways, for verification. The other way that Ethereum uses now with the new version 2.0 is proof of stake. And then there's a third blockchain that is becoming very popular that is called Solana. And Solana uses a mix of proof of stake and proof of history. So the blockchains are different, but the actual technology, is the same. Now, I think it's important, to understand the difference between blockchain and cryptocurrency. And cryptocurrency, what it really is a digital asset that functions as a medium of exchange on each blockchain. And there are many different types of cryptocurrencies or tokens. And another definition that I want to give you, is altcoin. Altcoin is very simple, is all the coins that are alternative or different than Bitcoin. So it's Bitcoin, and all the other cryptocurrencies are actually known as altcoins. So I would like to talk about, the different type of tokens and how they can be used, for different utilities, in different networks. But I'll pause there just to check on, Arthur, if you have any questions or anyone has any questions so far. If not, I will just continue, with different tokens.
So I think when you say altcoins, it's everything other than Bitcoin. Mm-hmm. And it really means alternative, right?
Exactly.
Okay, just because that clarifies things in people's mind. And then just repeat again, start with proof of work, then proof of stake, and Solana is proof of what? A combination of proof of stake and what?
And proof of history.
Proof of history, okay?
Yes.
So I just wanted to repeat that so everybody heard that. So we have
Yeah.
one quick question here. It's kind of out of context, but let's give it a try if you don't mind.
Okay.
What are your thoughts on the regulatory overhang over cryptocurrencies as central banks start issuing their own? So
Oh,
you can answer that later, but I just wanted to put it out there.
yes, that's a very important question, especially, for the people, I don't know if they watch, the session with Congress that happened last week. That was very interesting. So yes, I think I can answer that question later on. So I will just continue, if you don't mind, just describing the different, utilities, the token, the function of the different tokens. So the main, functions of tokens are currency tokens. The currency tokens, the best example of the most popular one is Bitcoin, and Bitcoin can be used to pay for goods and services around the world. And Bitcoin has been the cryptocurrency that is more adopted around the world. But as you know, it has become really challenging to transact with Bitcoin because of the high volatility. And now, obviously, the value has increased so much. Utility tokens, those are not the type of tokens. These are actually provides access to a function of the native network that you invest in. So this could be, for example, voting rights. You can have access to discounts, to the network. They could give you access to events, and they can give you access to different services that are often offered, by that network. Then the other very popular tokens are security tokens. And these tokens are actually like digital contracts with pre-built rules to buy and sell assets. So utility tokens can be very useful, for example, for real estate solutions, or even to be used as corporate stocks. Another token that everybody talks about are the stable coins, and the stable coins are coins that are pegged to another underlying asset. In the case of the USDC, is pegged to the dollar. There are other stable coins like the DAI, which is also pegged to the US dollar. So some of these coins are actually pegged to fiat currencies. And then the last category that I want to talk about is the meme coins. And the meme coins are very interesting because they don't fall into any of these other categories that I just described. These coins are actually, community driven, and their value is based on the hype that they have on social media, like Twitter, Telegram, and WhatsApp groups. These actual coins, they haven't developed any technology behind them yet. So I encourage everybody, before you invest and buy any crypto, to read their white papers to understand what they're working on, if there's actually technology already built behind it, or what are their intentions or what they're trying to do, within the blockchain. So it doesn't mean that the meme coins are not valuable, as investors. I think that as long as you understand what they are, and as long as you know when to invest and when not to invest in them, I think they're actually a very good opportunity, as investors. So I'll stop there. Arthur, I don't know if you have any questions.
So there's a lot of talk about staking altcoins. And I'm jumping ahead a little bit, but is that something that the fund, either one of your fund of funds, is pursuing?
So yes, I will actually let Andrew to talk about that later on, when he describes, the strategies, and our business models, and where we're investing in. But that's a good question. So Andrew, I think you should take a note and talk about that later.
Okay, by the way, there's a bunch of comments thanking you for the detailed and precise explanation. So there's questions, but we'll take them later. Continue.
So I would like to just address what I think is very special about these technology. And by the way, I think there's so many things that are special about this technology, but what is very exciting for me is that it encourages collaboration and a sense of community. And it's not only local, it's actually global. It's like a global community because this technology actually, can get implemented around the world, and the protocols are actually implemented around the world. So these, as investors, this actually creates more business opportunities in general. It also, encourages peer-to-peer transactions. So eliminates potentially the middleman. That means that you can cut fees, that the transactions are almost instantaneous. One of the things that I'm observing, and I'm always in shock because I think it's very impressive and very cool at the same time, is the first time, that I actually sent crypto to another friend through my digital wallet. It took, I think, like 5 minutes for the other person to receive my crypto. I couldn't believe it. I used to live in New York City, for 18 years, and I recently moved to Austin, Texas. So all my bank accounts were still in New York City. And I remember I was trying to send a wire and I couldn't do it because that specific bank, they don't have a branch in Austin. So I called the bank and they asked me to go in person. So I actually couldn't place a wire because of that reason. So I really think, that this technology can disrupt all the industries, as we know them today, and help us, to make them much more efficient. So it's a very, very exciting technology. So I would like to walk you through some of the examples, and or use cases, how you can implement, or how these protocols are implementing some of the tokens that I mentioned before. And I'm going to give the list is so big, but I picked the ones that I thought they are the most relevant today. And Arthur, if you don't mind, I'm going to give a list and maybe you can help me just to pick one and I can elaborate more about it because I want to give time, to Andrew so he can talk too. I don't want to talk too much. So some of the, projects that I am more excited about, it will be decentralized finance, the supply chain solutions, non-fungible tokens. Everybody's been talking about it the last year, the NFTs, also the peer-to-peer networks, the metaverse, and the DAOs. So what excites you more, Arthur?
I'd like to talk about the DAOs because I've been involved in some of the folks that have established institutions, banking institutions in Wyoming. And it's super interesting what's going on there because it's essentially a new form of corporate entity, right? Yeah, so let's talk about that.
Yeah, I mean, so it's interesting you pick that because I am very passionate about too as well. Like I've been talking about this for many, many years actually, so a DAO, what it means is a decentralized autonomous organization. And it uses, and I don't know how many people here in the call are familiar with smart contracts. So I'm sure, Arthur, you are. So the smart contracts, actually, they're a key element, in the blockchain technology, because the smart contracts, what they are, is very similar to the contracts that we use in the real world, not in the digital world. But the difference is that we use computing power and programming languages, in other words, AI, to actually make sure that the conditions and the rules on the contract, they're met. And if they're not, then that contract is not going to proceed. It's going to be broken. But we actually use AI to implement those rules. So I think it's fascinating, and I think the possibilities are endless. I think that with DAOs, we actually can't, eliminate a lot of even like waste, around the world, with just allocation and distribution of resources around the world. And I think the DAOs are actually pretty tied up with decentralized finance. And if you don't mind, Arthur, I would like to talk about DeFi as well. DeFi also, I think it is fascinating. Just, yesterday I was checking, the numbers from the FDIC. And there are around 14 million Americans unbanked today. And around the world, there are approximately like 21 billion people that have no access, to the financial services. And as Mexican, I see this all the time. When I go back to Mexico, it's very, it's impressive for me, and it's shocking to see lines of people just waiting out in stores to pay their electric bills. And most of these people are, construction workers. Imagine that you're working like really long hours, and then you have to, after work, you get paid by cash, and then you have to wait 5 to 6 hours on a line just to pay your utility bills. So with decentralized finance, this can change tremendously. If we find a way to actually get all these people into the financial infrastructure and into the game, it could be a huge difference. Not only, not only for the financial industry, but if you think about it's mental health, it's medical health, these people will be able to use their time wisely in other things that are more important rather than waiting 5 hours or 6 hours just to pay their utility bills. So there are some projects already in place. One of them that I think is really cool are the Bitcoin ATMs, where these people can actually deposit, their cash that they receive as payment, and they get back in return an ATM card with cryptocurrency. And they can use this cryptocurrency, to exchange, for goods and services. And I just want to remind everyone here that we're in the infancy of this technology. So of course, we're not fully there yet. But if you think about it in the future, more people using this and more people having access just to have a digital wallet, they will be able to have access not only, to buy goods and services, they will be able to have access to all the tokens that I described to you. And these tokens, some of these tokens give access to people to apply for loans, to use their cryptocurrency as a collateral to receive loans in fiat. So billions of people that right now are unbanked, they will be able to participate in the system. So as investors, that's a huge opportunity. So that's one of the things that I think is the most relevant. The other thing, that I want to talk about is that, and COVID actually accelerated this process, we are walking towards a cashless society. So with blockchain technology and with cryptocurrencies, this could be a better way and a seamless way to do it. Like New York City, for example, and I think San Francisco and LA, they actually have a regulation where they can force convenience stores to accept cash, because most of them, they don't accept cash, but they have to accept cash because of all these unbanked people. So if we actually are able, to provide banking to these people, they don't have to use cash anymore. So I think the potentials are enormous. And again, the basic things that I mentioned before, peer-to-peer transactions, no fees, instantaneous or almost instantaneous transactions, much more efficient. For example, I give an example, if Arthur, let's say, like he gets tired to live in the US today, and he, becomes super good friend with Andrew, and Andrew introduced Arthur to his super cool friends in New Zealand, and Arthur goes and visit, and he's like, wow, this is paradise. This place is super cool. I'm just gonna live here. I don't care. I'm gonna leave all my property behind, but he has his digital wallet, and his digital wallet has all the information he needs. His identity, his IDs, like all his crypto, all his basic information. He doesn't need to call any bank and ask for permission. He doesn't need to transfer any bank accounts. He's already set. He's mobile and he's global, and he can, still send me, crypto if he wants. He can still send me that $10 million that I talked about before. And he doesn't need any middleman, to approve that transaction. So I know I am explaining everything in a very simplistic way, and I know it's much more complicated than that. But I think, the point that I'm trying to make by talking about all these elements of the blockchain and the difference in the cryptocurrencies is that the potential is enormous, but also because the potential is enormous and the space is so big, it is also very challenging as investors and as individuals to find the right opportunities and to find really the protocols that are meaningful and they're doing something with the right technology. So I think that's why, ChainLink Capital Management is the perfect, investment vehicle, because we're a fund of funds and we get exposure to all these opportunities. And because we are full-time invested, in this space, we actually do a lot of research and a lot of due diligence, finding these opportunities. So I'm going to stop here because I've been talking a lot.
Yeah, that's okay. Actually, it's a perfect segue into how the two separate funds can be leveraged for those who aren't knee deep in this but want to be exposed to it. And so let's talk about how the fund is deploying capital, and then we can take some questions. Is that okay, Andrew?
Yeah.
Super. So I'll just go back into full screen mode here and talk about our first fund. So ChainLink Luna Fund, we started right at the very worst time you could possibly imagine, right at the beginning of 2018. We were about to go into crypto winter, so-called, basically 18 months of really, really bad markets. However, we made it through and have done extremely well over the last couple of years in particular. And the reason I think that matters is not only that we as managers have experience managing through thick and thin times, which I think is always important when you're investing in a fund, but also the strategy itself is really designed to provide superior risk-adjusted returns in crypto. And so the strategy helped actually prove itself out in the worst conditions you could imagine, simply because by being diversified, you're not exposed overly to any single risk or any single bad event. And that helped us to make it through a time where there were a lot of those events. There was a lot of, not only downward pressure on markets overall, but literally plenty of examples of fraud and other things back in 2018 and 2019 in the space. So what Luna does is it provides really strong risk-adjusted returns in crypto. The way it does that is through something quite familiar to a lot of people on this call, probably venture investing. So we are a liquid venture fund focused on crypto. And what I mean by that is that we think the best risk-adjusted returns in crypto can come from investing in venture assets, pre-market assets. In this case, it's not just company equity, it's actually mostly tokens of these projects, many of which are not actually companies. They're decentralized, but nonetheless, they have tokens which you can buy if you have the right relationships before they're readily available and publicly traded. And so our fund invests in underlying funds that are really good at that. They're really good at the pre-market phase of the venture life cycle of crypto. Now, importantly, we call it liquid venture because crypto, unlike traditional technology venture investing, has a very short time frame to liquidity. So instead of giving your capital over several years and getting it back over maybe 5, 7, even 10 years, many projects become liquid, like you can actually trade the asset that you purchased in a pre-market phase within a year. Now, you may have a lockup that goes beyond that, but there'll be a price that will be visible, public, and fluctuating in a time frame as short as that in many cases, not all, but in many cases. And so it's really important to do a good job with the liquid portfolio as well as a venture portfolio in order to do well in crypto venture investing. Because you need both skill sets. And so we look for underlying managers that are good at both, and we have both liquid and venture components of our portfolio through our underlying funds. Another example of why that's important is because when you get liquidity, there are additional, as somebody asked in the chat before, there are ways to add to your returns through staking your tokens, your altcoins, and generating a yield off of those. So you may decide that you believe in the project you invested in at adventure stage. You now have the tokens in your wallet. You could sell them if you wanted to, but you understand enough about the project to believe that it's got a very strong next phase ahead of it, that the token price will appreciate. You can actually stake the tokens that you've already received to earn more of a return. And that is a way to increase your return on investment by doing a good job with that liquid phase of this, what was originally a venture investment. And in many cases, you get disproportionately rewarded for doing that at an early stage. You're taking more risk by locking up your tokens at the early stage of a project. And so you get additional rewards on top of that that make it a really strong risk reward value proposition to do that sort of additional locking up, even once you could have the option to be liquid with your venture investment. So suffice it to say that the strategy is different than tech venture investing. It also is different from an investor's standpoint, meaning that you get the option to put your money in and take your money out quite readily. So it's got the benefit of being a quite liquid fund, coupled with what we think are the best risk-adjusted returns in terms of the strategy, which is venture investing. The final thing I'll mention about that is that one of the ways that we add to the returns and try to outperform other venture-focused funds in the space is that we've identified fund managers that are also good at doing some risk-neutral trading. So we're able to essentially earn more of the tokens that we are invested in through risk-neutral strategies like arbitrage, for example, that allow you to take advantage of price inefficiencies, market inefficiencies that can add to your returns even when the market's going down. And that's another way that over time we believe that we can outperform most other strategies. So key take homes, liquid venture we think is the right way to invest in crypto. And number two, diversification is really important because it's still early, it's still extremely volatile, it's still extremely risky. So you don't want to be overly exposed to any single risk lest your investment get taken out. You really want to be able to live to fight another day, as they say. And a fund-to-fund strategy enables us to maximally diversify across not only managers and strategies, but also regulatory geographies, which is really important in the space. So that's
So Andrew,
why fund-to-fund.
one second, if it's okay, because the language is a little different. So the traditional language, if I'm correct, in staking is more or less you own something and you hypothecate it. And so I think it helps people understand better if I'm assessing it correctly, is that you own the token. So when you're staking it, basically you're lending it out or lending or hypothecating it in some way and taking risk, but that allows you to earn something on something that you have in your basket.
That's exactly right. Yeah, thanks for clarifying that. And that's important because these tokens are the and I'll say to the sort of digital oil metaphor in the screen here. The tokens are what actually allows the transactions on this decentralized network to happen, to actually be recorded and to be secured. And so it's important that there is liquidity in order to enable these networks to work. So whether your use case is peer-to-peer insurance or lending and borrowing, a DeFi use case, or whether it's gaming, whatever it may be, you need that network to have liquidity. You need to be able to have a flow of investments and tokens that are there to drive it in order for the whole thing to work. And so incentivizing people to lock up their tokens in the early stages of these networks, in particular, incentivizing developers to use these networks to develop applications on top of them is a really important piece of the puzzle. So, and staking is a key part of that. Now, as you said, there's also risk associated with that. So you want to do that in a protocol that's not going to succeed. There are lots of risks, not only poor technology that doesn't get adoption, but also literally risks of hacks and fraud that can undermine, the what would otherwise be strong investment value proposition of a particular protocol. So you need due diligence, in a very rigorous way, what you're not only investing in at a venture stage, what you're choosing to stake, lest that investment goes south. And that's why we invest in teams that we think are really good at that, underlying fund managers that we think are really good at the diligence of all these different vectors of risk. Zooming out a little bit thematically, so I just described a bunch of the altcoin use cases, and Paola did a far better job than I of adding some color on a bunch of them. But basically, we're talking about, in this digital oil metaphor, the blockchains that are to do things in a decentralized way that we might alternatively do in a centralized, traditional way, like I might borrow money from a bank instead of borrowing it from Paola. And borrowing it from a bank would be traditional finance, borrowing it from Paola, or a pool of friends would be decentralized finance in this analogy. And this digital oil theme would be basically the technology infrastructure and the token economics that enable that new decentralized way of me borrowing from a pool to happen, not doing it through a bank. That's very different than Bitcoin, which is really a store of value. It's a fixed supply asset. Many people hypothesize that it will be like digital gold someday. I don't think it's there yet, meaning it does actually go up when investors are risk tolerant and go down, generally speaking, when investors are risk averse. But it is hypothesized, and I think logically plays out that eventually it will be an alternative to gold, and it'll be an inflation hedge, which is quite a different use case. It's really censorship-resistant digital money is one of the people's favorite ways of describing Bitcoin, whereas these Ethereum and its competing networks are really the tools to create utility in a new decentralized internet that can do the immense diverse array of things that Paola described before. So we look at all that in our fund, right? We look at people that are really strong in Bitcoin universe and economy, really strong on the utility token and altcoin universe. And then we also are starting increasingly as we get into 2022 to look at, okay, you got these fundamental building blocks. You've got this digital oil. You've got these so-called layer one protocols like Ethereum and Solana that are building blocks. You've got solutions that enable those to scale in terms of the transactions you can run on top of them, like Polygon and Polkadot on top of Ethereum, that enable them to work at a global scale more pragmatically. Now, what are you going to do with all that, all those building blocks? Really, up to today, I'd say predominantly we've been investing, and investors have been investing in these building blocks on the hypothesis that these building blocks are going to enable you to do exciting things and to have new decentralized business models that are going to make a lot of money, and therefore make the tokens that power those decentralized networks really valuable. And DeFi is sort of was the 2021, the big story really overall was DeFi, these decentralized finance transactions, peer-to-peer insurance, peer-to-peer lending that really, took off. And this is something that actually consumer could touch, that actually started to make a lot of money. It was built on these fundamental building blocks. Later in 2021 and certainly going into 2022, we think that universe of things you can do that's useful is expanding way beyond DeFi. NFTs have been very top of mind and in the news a lot, and not least of all in New York with NFT NYC week that happened recently. But basically the ability to uniquely identify an asset, as Paola said, digitally, as creating immense opportunity in a bunch of different arenas, from art and artists, really making the ability for an artist to get more value from their creative work with fewer middlemen to sell it through is a big shift in the art world that NFTs are enabling. The whole play to earn gaming industry is burgeoning now, where people are buying and selling unique attributes, unique powers, unique characters in these games. That's another example of the use of NFTs. Titling and fractionalization of physical assets. Hernando de Soto, the former president of Uruguay and a famous economist, is known for saying there's $1 trillion of untitled assets in Latin America. NFTs can potentially help title these untitled assets and therefore make them something that you can actually borrow against and can build wealth around. And you've got the ability to then have communities that are gated by having what's essentially a membership token or NFT. Friends with Benefits is one spin in the news. And these communities that I really do think have the potential to replace big centralized social networks like Facebook, which extract value from our data, and instead to have decentralized social networks that are owned by us, where our data is actually empowering us and ultimately, in some cases, actually benefiting us financially. All that rolls up, and sort of back to my original origin story of how I got interested in decentralization back at NASA in 2008 to something called the metaverse. And Mark Zuckerberg made it very famous recently by changing his company's name from Facebook to Meta. But really, our vision of the metaverse is that it is all these things we've just described, building on top of one another into a very practical, functional, digital parallel reality, where at NASA in 2008, we interacted through this metaverse platform called Second Life because we were literally, it was illegal for us to travel using tax dollars as the government was shut down. And today we use Zoom partly, because of COVID, right? And it's just a practical solution. But if it's easy for us to go between a banking transaction to a gaming transaction to a meeting like this, to a social network and a party, all with our digital representation of ourselves, our avatar, and all of our associated assets like our bank account, our identity, claims and credentials about who we are, all that is a metaverse. And it's not going to supplant our physical reality. I think it's going to augment it and complement it. And we'll live in a future state where those that are most facile at moving between these worlds, I think, will really thrive. And so that's where all these technologies roll up to, I think, is an open metaverse that is not about Facebook. It's about all the other things that can be done by a whole range of different entities that are going to be savvy about how to use the metaverse. So I'm going to fast forward just because of time, but we're invested in all that through ChainLink Luna Fund. We do it in the best risk-adjusted way that we think is possible to do by being just very, very diversified. Now, we recently launched a second fund, which is the other end of barbell. So I just said everything we do with our ChainLink Luna Fund is, we think, the best risk-adjusted way to invest in crypto. Nonetheless, you're investing in crypto, and it's still very early. It's still very volatile. It's still very risky for all kinds of reasons that we could spend hours talking about. For our own capital and that of a lot of our investors, including some quite well-known, very large crypto investors, we also wanted something that was very low volatility and low risk relative to our ChainLink Luna Fund. And that's our ChainLink Alma Fund. We started it recently. And basically, we found that the strategies that were working to generate some additional returns, some additional alpha in Luna Fund could be lifted out and put into its own dedicated fund that doesn't really care if the market's going up or down or sideways, but is generating market neutral returns. And so we basically use this, or I use this as a place where I park cash that I want to not lose ground against inflation, the way I know that my US dollars in my bank account will, but in a way that can actually generate significant returns by low risk standards, by taking advantage of inefficiencies that are in the crypto market and by investing in managers that are really good at extracting a yield from those inefficiencies. So ChainLink Alma Fund is a risk neutral fund. It's not correlated to the market. It's also very diversified. It's also a fund to fund. So we invest in a bunch of different yield generation strategies that are risk neutral. The buckets at a high level are this, DeFi credit and lending domain that we touched on. So this can include versions of staking, but ones where you've hedged the exposure to the underlying price of the token, but also various versions of lending. Arbitrage. So there's still inefficiencies today between different crypto markets and different geographies. For example, different timeframes. If you're buying futures contracts versus the price of an asset on spot today, and so consistently able to generate some arbitrage returns. And then some versions of so-called trend following and mean reversion that we're able to add into this that really juices the potential returns while being the risk side of it being balanced out by these other two categories. We've put together what we call an efficient frontier analysis of all this. And we've done this with Willy Woo, who's a very famous global Bitcoin analyst. And he's written software basically to say, okay, all these universal funds that do all these things I just described, what's the best combination of them that can provide the best risk-adjusted return for whatever level of risk you choose to take? So if you choose on the x-axis here, a level of risk, somewhere in the middle, up where like H4 is, in the top middle of the screen, sorry, the text is small. What is the combination of all the millions of possible portfolio permutations that can generate the best return for that level of risk? And so that's the analysis we do for ChainLink Alma Fund. And this is the team that does all those things I just described, including Willy at the bottom right, who's involved in our Alma Fund, to be clear, not our Luna Fund. And Paola and myself and some other smart folks that help us do this. So I know I've been going on a long time now, so I'm going to pause there and say thank you for listening to all that, and would love to jump into any questions.
So can we first, at this juncture, if it's okay with you, show the performance and then the structure of each fund?
I
or
will
you
do
can
that.
just talk about it.
Yeah, I'll rather, it's in a different presentation, so rather than pulling it up, I will quote it for you. The second fund is really new. We are about 4 months of track record, and we're up a couple of percent. The target there is to get 25 to 50% returns per year, net of fees, with we think very modest risk. But because it's only been live for a few months, we can't prove it to you yet. This is based on back testing of data using the efficient frontier analysis that we do with Willy Woo. So I guess stay tuned on that one, or although we all have a lot of our own money in it because we greatly. Luna Fund is, let's see, the last 12 months, last 12 calendar months, we're up 530.05% net of all fees. So that sort of gives you a sense. But the first year in 2018, just to be totally candid, we were down about 50%. So it's incredibly volatile. But the last couple of years have been fantastic, and we've beaten the markets by most benchmarks you can imagine. And the way that we've done that, we think, is just because we think this liquid venture strategy is the right way to do it. We've also had somewhat lower volatility than the market indices overall, again, because venture investing tends to balance that out if you're really diversified. So that gives you a sense. Luna is sort of the shoot the moon, if you will, which is appropriate given the name. Alma is the stable one.
And both have check sizes of what, just to get in?
Sure, the minimum is 250K for both. We've had investors that have put in as much as 5 million. There's quite a range, but it's highly liquid. So there are also investors that have started with 250 and they have added in literally every month since they've come in. You can put money in and take money out really any month of the year.
Yeah, just to repeat for the group, we're going to make sure that you're in direct touch. So if we didn't get to your question, you can ask them directly and then communicate obviously with Paola and Andrew. But just a couple things that I find interesting, if you don't mind me taking liberties here with questions. People have suggested that the Bitcoin white paper and its immutable ledger is pretty bulletproof and has proved to be, even though there's hacks, but their hacks aren't in the blockchain, the hacks are in wallets and so on and so forth, right? Is quantum computing a threat to the cryptography?
Yeah, so to be totally candid, this is not my area of deep domain expertise. This is why we invest in underlying fund managers that are much more technical than we are. So with that caveating, my understanding is there is quantum computing today. It's just not, and there will be tomorrow, but there's not going to be the folks that I feel like are the smartest in the space don't believe there's going to be a moment where suddenly all of the encryption that is built into, say, Bitcoin is going to suddenly be completely useless, if you will. And if and when you start to see an erosion where if you don't follow good security practices that are above and beyond its core cryptography with your own wallet, where you're starting to see significant vulnerabilities, you can, there is already work going on how you would fork that blockchain to make it more quantum resistant. And so again, way out of my depth to talk about the ins and outs of exactly how and why. But the folks who I think are the smartest in the space about this issue are not, I wouldn't say blasé about it. There's a lot of hard work going on, but they also don't believe that there's a sort of a coming tidal wave that's going to suddenly render the encryption that blockchains use irrelevant in a way that can't be proactively addressed.
And then the other a couple things, if it's okay, is the hearings that happened. Was there a takeaway worthy of mention from those hearings?
The big one for me, and Paola, feel free to jump in if you have a different one, is that we've got a lot of people that are critics and a lot of people that are fans in Congress today on both sides of the aisle of this space. And you've got some really strange bedfellows where you have Ron Wyden and Cynthia Lummis in the Senate working together on trying to improve the infrastructure bill to alter some crypto reporting provisions in there. That's great news for this space. It means that it's nonpartisan. They're absolutely valid critiques and valid. Obviously, we have a somewhat positive bias here. Reasons to love this technology and what it can do for our society. But it's not going to be. I think we're past the point where it's likely to be sort of Republicans on one side, Democrats on another, and that I think is nothing but good. Meaning there needs to be good regulation in this space, and I believe that if you have people across the aisle actually working together with smarty, both critics and fans, you'll end up with good public policy, which I think will actually lead more investment to come into the space and ultimately have an uplift on asset prices as more and more institutional capital sees the asset class being de-risked from a regulatory standpoint over time.
Totally makes sense. And then I know you saw this question. There's 2 foundational technology patents that have been issued, Asia and the US, which apparently cover the majority of DeFi. How do you see this affecting both your investments and the industry?
Yeah, so again, I'll do my old caveat of, there are folks that are so much smarter than me about this, and I'm not an IP attorney, but I will say there's a very, very strong proprietary IP culture in crypto that I think is going to have 2 impacts. One, there's the Cryptocurrency Open Patent Alliance, which Jack Dorsey and Square have gotten behind. We're basically getting people that have relevant patents to contribute them and to commit to not enforcing them against others in a way that would create a chilling effect on the space, number one. And number two, you've got a culture that is really, and its origins in anti-censorship and censorship resistance. And while intellectual property does not equate to censorship, there is very technologically easy to do things outside of the regulatory system to make all the actions that are already happening happen. And in fact, that's how Bitcoin got its start. It wasn't regulated or endorsed by a government, let alone a patent enforcement regime. It was actually censorship resistant digital money that just worked. So I think it'll be difficult to enforce patents, even if you wanted to, that will not that will not be worked around in a way that would become unworkable for a patent owner to enforce from a practical standpoint, or at least from an economically advantageous standpoint, is my guess. And again, smarter folks than me about it, but I think the Jack Dorsey approach of getting people to actually come in and collaborate with their patents rather than to compete, certainly rather than to litigate, is probably going to carry the day.
Yep. By the way, for the record, I'm going to jump on the bandwagon and change one of my company names to a single syllable and something very distracting, and see what happens. So we do need to wrap it up. Paola, you want to tell our guests that they're welcome to contact you if they're interested in learning more and deploying capital, and then wrap things up?
Yeah, absolutely. Again, Arthur, thank you so much for this opportunity. It was super fun and exciting to be here with you and everybody else. And for all the participants, please feel free to reach out directly to us. You can send us an email directly, and it goes to our entire investor relation teams at invest@chainlinkfund.com. And we're happy to answer any questions you have about this space, but also, about our funds, and we can set up a call, and walk you through all the strategies if you want. And again, thank you so much, everybody, for joining today. It's early in the week, and happy holidays for everybody. Thank you.
Great, Paola. Thanks very much. Glad we got to do this. Hope to see you again soon. And thank you all for being with us today and sharing with us the only thing you can't make more of, and that's your time. Until next time. Thank you.
Thanks, Arthur. Bye.
Thanks, Arthur. Take care.
Bye-bye.